China is leading innovation, production, and technology in the fierce competition between the US and China for the energy sector's future. China now controls the future of energy after surpassing the US in a few short years in terms of innovation, industry, and technology. Because it mirrors the US's historical supremacy in sectors including manufacturing, supply chains, solar, wind, and electric power production, this power competition is especially intriguing. In the past, the US dominated the solar business, which was first created by American scientists in 1954. But by 2024, the US will produce fewer than 1% of solar cells, and Japan will have stopped producing any at all. The US solar sector is at a stage where it cannot recover since China controls more than 95% of the manufacturing of polysilicon. Politicians often accuse Beijing of unfair trade practices and blame the Chinese government for the demise of the US solar business. State-owned enterprises, subsidized loans, import tariffs, or intellectual property theft, however, have not been the main drivers of China's advantage. China's advantage instead stems from private companies making large investments and attracting top personnel from across the world to a thriving sector. The US government also has a strong desire to dominate the semiconductor sector, even if it means hurting some of its closest friends. US export restrictions on China caused ASML, a Dutch manufacturer of semiconductor equipment, to lose $53 billion in value in a single day. Under the guise of national security, the US administration is putting tremendous pressure on the Netherlands to cease selling to China. The Double-Edged Sword of Semiconductor Export Controls is a recent paper that explains why this approach will eventually fail. It contends that while the US imposes stringent regulations to prevent China from obtaining sophisticated semiconductors, China is making remarkable strides in response by using creative tactics. China may be changing the global semiconductor industry in addition to lessening the effects of the sanctions. In conclusion, China dominates innovation, manufacturing, and technology, and the US and China are engaged in a fierce competition for the energy sector's future. The US government's attempts to keep China under control and preserve its technological superiority in semiconductors might eventually backfire since China is still using creative tactics that could change the semiconductor industry globally. One of the main benefits of China's continued progress in spite of US sanctions is that, once a sector has official approval, it is nearly certain to thrive as new businesses, entrepreneurs, and resources pool their resources throughout the whole country. This is shown in the electric vehicle (EV) market, where sales of all international car brands are plummeting in China. According to renowned auto expert Michael Dunn, the majority of the largest automakers in the world will leave the Chinese market in the next 5 years. Jim Farley, the CEO of Ford, emphasizes the worry for the US and the quality of Chinese automobiles. After years of dominating the Chinese smartphone market, Apple is no longer among the top 5 smartphone brands in China. Instead, Chinese competitors now hold all 5 spots. With its shops dispersed around the nation, Apple still has a lot of promise in China. According to a public opinion survey on the Chinese perspective on international security conducted by one of China's leading universities, these new tendencies are part of a bigger picture. The present US strategy towards China is causing resentment among the Chinese people, as seen by the astounding 87.6% of Chinese individuals who think that the US is attempting to control China's growth. China will have no choice but to turn home and expand its domestic market if the US government imposes sanctions and tariffs to stop China's ascent. Since China is essentially creating the future of our planet, cooperation between the US and China would be excellent. China has finished paving 157 kilometers of roadway without a single human operating a machine, making it the first completely autonomous paving construction project in history. The operation was managed by sophisticated drones. China would only lose a small portion of its technology advancements over the last 20 years if the US disappeared from the planet. Nearly every important technological advancement in fields including robots, AI cell phones, solar semiconductors, and EVs batteries has now been mastered by China. Our planet's future depends on the nuclear energy industry, and China is a global leader in this vital technology. According to Bloomberg, China intends to spend $31 billion on a big nuclear drive, surpassing both the US and France as the world's largest producer of atomic power by 2030. To match China's expansion, the US has to make large investments in this sector. The first and only firm to apply the profitable royalty and streaming business model entirely to the uranium industry is the Uranium Royalty Corporation, an intriguing company listed on the Nasdaq under the ticker URI. Because it makes money from uranium mines all around the globe via royalties and streams, the corporation enjoys a first-mover advantage. URI Corporation purchases royalties directly from uranium miners and profits when those miners create new uranium streams. Royalties are payments given by a property owner to the royalty holder. The company's distinctive business strategy enables it to acquire royalties and streams globally. The Uranium Royalty Corporation has a globally diversified asset portfolio that comprises stakes in 19 advanced licensed and producing uranium projects in several jurisdictions throughout Canada, the United States, Spain, and Africa. This business model lowers risk in other areas while providing the uranium sector with beneficial exposure. Investors have a significantly more diversified portfolio, fixed operating expenses, no development capital expenditures, exploration and growth potential without associated costs, and the capacity to expand without extra management when they work with this royalty firm. With more than $304 million Canadian dollars in cash assets and a solid balance sheet, URI Corporation is in a good financial position and its stock has increased 36% over the last month as of this recording. Scott Melby, one of the most reputable uranium business veterans with over 40 years of experience working for well-known companies in the field, is in charge of the firm. URI Corporation provides a thorough investor presentation that lists every mine in the globe in which it presently has investments in order to assist investors in making well-informed judgments.